Trader. And if you're not currently subscribed to the channel, please like, subscribe, comment, share with a friend. We have a lot to go over tonight. We have the opening price action on the futures. We're going to spend some time discussing equities, currencies, commodities, bonds, a lot to get to. Headlines that are coming out this week, lots of earnings coming out, economic data we're going to discuss coming out, along with some clearing up of this recession confusion that apparently has impacted Washington, D.C. The propagandists on CNBC are pushing the narrative that, well, maybe we're in recession, a hint of a recession. Well, we're going to talk about that in a moment. Then we're going to talk about some chart requests. But what we like to do first is take a moment. Let's allow things to settle down. Let people enter. Give people a break. And first say, hey, Bob, share your screen. Share your screen because I always forget. I'm not doing it this week. Here we go. Boom. Boom. Okay. Let's say hello to people. Franklin, hey, brother. Evening, Bob and crew. Hope everyone got some downtime. Yeah, I relaxed today. Poolside. Even did a yesterday and today. I did a toxin cleanse. One organic lemon, whole thing, peel, rind. What's the other thing? The white stuff, seeds, everything. Blueberries in a blender, about 4 ounces of water plus some ice. That cleans you right out. It really makes you feel good. I should share the video. On Thursday night, if I remember, I'll share the video. The guy says blend it for like 30 seconds, more like a minute, but you really got to grind up a lot. But it's really, really good. Hi, Bob, Franklin, Seymour, Pete, and everyone else. Hello, sir. Welcome. Larry, Jedi Kid. We are near Fibonacci resistance levels like we had seen in mid-June. Bob, S&P 500 had lower by Friday. Yeah, and I think that I kind of went over that on Thursday night. I reiterated it on the week ahead commentary. While I don't use Fibonacci's per se, I do, of course, use historical support and resistance levels. And I mentioned that on Thursday night futures live, Thursday night stock charts live, I mentioned that on the weekly charts that while we had some more upside potential, that we should expect to see a lot of zombies, a lot of dead bodies, a lot of overhead supply. And we hit a lot of it on Friday afternoon. We backed off a little bit on some indexes. Some indexes we closed right into resistance. Some we haven't necessarily hit yet. But folks, if there's nothing else you do between now and the opening bell tomorrow, go to your weekly charts, go to your monthly charts, understand where your positions have overhead supply. If you bought low, think about making some of those profits real. Thanks for that, Larry. I would have forgotten to bring that up. Okay, we have Pete. Hello, Pete. Who else do we have? Denny? That's Denny. Hello, Denny. Billionaire, MAGA. Yes, sir. That's going to cost me 2 subscribers, but that's okay. Franklin to Lewis. Hello. Chuck, hello. Pete. Not sure it sounds great, but cool. We like the positive mental attitude. Trader Isaac, hello, sir. Yoga Mac, you've been missed. Where have you been? I've been quoting you. Bad news is good news. Yo, Bob, I was out last week. We missed you. We acknowledge you. Back in the game on Friday. Last minute pullbacks puts on SPY. Every bear market rally is different. Yes, sir, they are. I want to ride the volatility wave. Yeah, I have a chart of volatility I'm going to bring up in a moment. A lot of damage done to volatility last week, but I think we are going to see a bit of a bump this coming week. I'm not saying that we're going to go straight down here, but I do think that, as Larry said earlier, that we're probably going to see a little bit of pressure on equities. And we're already seeing it, as a matter of fact. I'm not saying we're going to open up like this. I mean, we're a couple of minutes into the new trading week here. So we don't want to be doom and gloom. It was a strong market. But, I mean, Friday afternoon was the mother of all melt-ups. I mean, Tesla ripped through the ceiling. You want to talk about gamma event? That was some rally. Hello, Bob. Looking forward to your commentary this evening. Thank you, Seymour Rivers, for being here. Smash the like button for Bob, guys. Yes, we have how many people on right now? 24 with only 7 likes. Horrible. Please smash the like button. Help me out, YouTube algorithm. All right. What else we got? TZ Burton. Hello. Jeppy pays 9% dividend, which worries me. What's your opinion? I don't know the business, so I don't know the dividend's safe. Not quite sure. That's not even a chart thing. That's more of an understanding of their fundamental business. So I'm going to be a no comment on that, because I try not to speak of that which I do not know. That keeps me safe. Poolside with a cold beer. Awesome. I was earlier, and I'm probably going to be jumping back in right after this. All right. Let's get to the futures. Okay. So we have the S&P 500. Let's get rid of this. The S&P 500 down about a quarter percentage point. This is a 30-minute chart with an outside reversal bar from Thursday's close. So not the best way to open up here, but it's way too early to get doom and gloomish. Let's set up our alert, as we typically do, to identify when we take out higher highs or lower lows. Higher weekly highs. Far more significant. Okay. Let's take a quick peek at, what do we have next? The Russell, small caps. They are down about a little over a third of a percentage point. Another outside reversal bar, 30-minute time frame. Just take note of RSI. RSI is pretty weak. Let's pull back here. Yeah, it's pretty weak after being very, very overbought. So think about this on a 4-hour time frame, that when you take a look at the Russell 2000, we have a fairly overbought condition. Typically what you'll get, if it's a healthy bull market, or this is not a bull market, this is a rally. If it's a healthy rally, it's got more legs, we'll pull back to the rising 20-period moving average on a 4-hour time frame, and then we consolidate and then take another leg up. So we are at current putting in lower highs and lower lows. And we have broken trend. Well, actually, no, we have not quite broken trend yet. We're there, though, right at the cusp. Let's go back to a 30-minute chart. Continue to weaken here. The Nasdaq, which was in fuego last week, is also down about the same as the S&Ps, about a quarter percentage point. Take a look at that 4-hour chart again to see how we closed out the week. You know, overbought. So let's just keep an eye on the Nasdaq. What we're hoping for is that, as options traders, you know, we of course we trade equities, but we also do a lot of options selling. So what we want is a lot of volatility. Volatility is our friend, and it's especially our friend when we trade earnings. Now, last week was not a great week for trading earnings because uh, earnings on stocks like Amazon, which would have had an IV percentile rating of, let's say, 90, 100% last quarter. This quarter, Franklin could tell you better than I can, but I think it was like, in the high 60s, low 70s. Uh, the reason why that's important is that if you're going to do undefined risk trading, you want to get far away as possible and get paid from the closing price action on that individual name immediately prior to earnings release, because that's a binary event. Nobody knows what's going to happen. Maybe nothing, but a lot of times, and don't forget, we are making the market on that trade. So we have an undefined risk. So with the Amazon trade, not everyone walked away. They took the risk. They got paid. I walked away, and we have to walk away from trades where we have too much risk and it's undefined. I've been down this road before. Right now with Chipotle Mexican Grill, I'm underwater on it. So we had to roll out that trade. I'll be defending it this week, but I think that it's overbought. It's going to pull in like the rest of the market, at least in the short term. That'll give us our opportunity to exit, ideally with a scratch or better with a profit. Okay, let's go back to a 30-minute chart. So we did equities. We're a little bit weak. Let's take a look at the U.S. dollar. The U.S. dollar really got hammered last week. We had a weekly breakdown. We had a weekly breakdown the week prior to last, a continuation breakdown last week. What we did last week is that we filled the gap, which had opened up several weeks ago. At current, we are still down from the close, while we have a green candlestick at current that's down from the closing price action here. Actually, no, we're positive. I'm sorry. My eyes deceived me. We are slightly up at current on the US dollar. So that leads me to believe that we're probably going to have a little bit of weakness in gold. Yep. Gold had a very good week last week, but we anticipate pullbacks because we had a bit of a breakout. We're going to get a pullback, a retest. Same thing with the gold mining stocks. So gold fractionally lower. Let's check out silver. Silver fractionally higher, not fractionally, it's up nearly a quarter percentage point. We were higher, but we faded since. Take a look at a 5-minute chart. That's strange. Doesn't look like we closed, opened up, but okay. Bit of a comeback here. Let's go back to a 30-minute chart. Let's take a look at protein. And take a look at protein. We're going to take a look at hogs. We're going to take a look at cattle. We'll watch cattle right now. What I like to do when I see a chart like this that's looking pretty vibrant on a 30-minute time, I want to see how we closed out last week. How does the weekly chart look? An inside bar. So no new high, no new low. This is the potential for a left shoulder, potential for a head, and then you need to, of course, form a right shoulder. I don't think it's going to happen, though. Could be wrong, but I'm certainly not calling for a breakdown, although you could see it setting up. But you could also see a setup for a continuation move up higher. So this chart is alive and well. We're putting in higher lows and higher highs. And the reason why we go over agriculture and we go over protein, the reason why we go over copper, this is all inflationary. So we're not gonna look at the Fed's PCE number or the CPI number and say, okay, we believe those numbers. No. What we're going to do is we're going to take a look at the charts, and we're going to take a look what the market is saying. And if the market is saying commodities are hot, therefore inflation is hot, prices are hot. So you need to watch the price of the 10-year yield. If the 10-year yield spikes to above 3%, you don't want to be long of beta, meaning high tech. growth stocks are going to get hammered. So while we're not necessarily invested in cattle or hogs or in wheat or in, we sold our chicken, our egg company, but we're going to buy that back. As a matter of fact, Cal-Maine Foods, high IV percentile, we're going to be selling naked puts members this week to get re-engaged with Cal-Maine Foods. So agriculture, this tells us, it tells us whether or not we're being lied to and how bad we're being lied to by the government. So feeder cattle, still a strong chart here. Hogs, very good looking a weekly chart. The trend is clear and defined, and that trend is up clearly, and it's going up higher. So you got to pause here. And when you hear rhetoric, like not rhetoric, it's not rhetoric, it's fact. So when you hear commentary like this, you got to say, okay, is that bullish or bearish for equities? Well, if you believe there's a lot of inflation out there, then you got to say, okay, then yield should be going up higher. I need to be careful of being long high beta stocks. I constantly repeat that for a reason. Now, copper, which is an industrial metal, is very weak. Very, very weak. This is a big breakdown. So this is also a sign of a global slowdown. Dr. Copper is not implying in any way that you have a lot of demand around the world for copper. Therefore, those who believe that we're not in a U.S. recession or not in a global recession, at least in the West, they better look at copper. Let's take a look at wheat. Wheat prices, they've taken a nosedive. Lots of resistance immediately above at around 8.48 the bushel. Soybeans, nice move up high last week. Is this a dead cat bounce? We don't know. We don't know until we get a pullback, a higher low, and then a continuation breakout to a higher high. Simple as that. So I wouldn't be a buyer of soybeans. Corn, another commodity that has been annihilated. Good rally last week, but we don't know whether or not this is a bottom. It's possibly a bottom. Can you put some risk capital to work in agriculture? Sure. Stay small. Look at the DBA. The DBA is the agriculture ETF. Let's move on. So what we want to take a look at. I didn't go over energy. Oh, look at this. Look at this. This is a blow off top. I think we have a double top on nat gas. And look at the new weekly lower low here. We're down nearly 4 1/3% on natural gas this evening. So here's your bearish reversal bar. For those not familiar with these the terminology I'm using, bearish reversal bar, bullish reversal bar, bearish engulfing, bullish engulfing, 5-part video tutorial link below. Free. 5-part series free. Just click the link below. And like, subscribe, please. Leave a comment. So we are down weekly time frame, new weekly lower low already. Wow, let's drill down here. This has got to be bananas. Yeah, big drop here. Big drop. Okay, let's go back to the weekly chart for a moment. I want to take a quick look at light sweet crude. Where's my light sweet crude? Come on, Bob. Get your act together. Okay, light sweet crude down a little over 0.75%. You have resistance immediately above. Weekly time frame. Let's take a peek at the 30-minute chart. Wow. This is a bearish engulfing bar. 30-minute time frame. They took it higher and then reversed it on the session, just like they did with the equities. Funny how they're trading in tandem. There doesn't appear to be a lot of volatility, a lot of volume here. Yeah. There's not a lot of follow through to the downside. So this could rally back. Let's just do this. because oil is the single most important commodity when it comes down to inflation. And let's throw up another alert here. Just so we know if we break out of this range and what direction, most importantly. If we break lower, it's probably bullish for equities. If we break higher, that becomes a problem because oil bleeds into everything. I see a lot of comments coming in here. Let us take a pause. Two-week rally on SPY. Puts are in and the powder ready to roll. I'm probably going to be picking up some VXX puts this week, but I'm going to be going out a long way, long way. I want to have a safety net, and I want to take advantage of the cheap volatility right now to do that. Seymour Rivers, there seems to be a divide in opinion about a bear market rally versus out of the woods and heading to new highs. Thoughts? You need to use a monthly chart, if not a quarterly chart. You know, for those that are looking at, God forbid you're listening to the talking heads on financial news media. God forbid you're going to go broke. If you're looking at intraday charts, if you're looking at even a weekly chart, there's too much noise. You need to see a sound. But well, you know, let me take a step back. You need to see capitulation. We have never had capitulation. How do I define capitulation? VIX greater than 45, blow off top on the VIX, and then you get that big V-shaped recovery off the lows on the S&P 500 Qs, everything. Then you get pullback higher low, then you get your higher highs, weekly, monthly time frame, ideally monthly time frame. Then you're in the situation where you have a new bull run. Ideally, you have the Federal Reserve at your back looking to decrease interest rates, so that way it fuels the rally up higher. We have a Federal Reserve that has really not followed through off rolling off debt off their balance sheet. They've stated in their last press conference they plan on ramping it up in now September. It was supposed to be August. We'll see if it ever happens. But the trend, folks, the trend on the Fed's balance sheet, while nowhere near what they committed to, we are seeing lower highs, lower lows. So like with anything else, a trend has developed, and the trend is your friend. Even though I'm a contrarian, I believe in it. So lower highs, lower lows, albeit very, very small. It could be the crack in the dam on the Fed's balance sheet if, in fact, they pull the trigger and they really start dumping billions upon billions of treasuries and mortgage-backed securities onto the marketplace. You're going to see equities take a tumble, a big, big tumble. So, word of caution. The VXX confused me last week. Usually use it as an indicator or confirmation along with the dollar for SPY. I stayed out due to confusion. Yeah, it's been happening a lot during during 2022. I can't count how many times, even on a weekly time frame, where we've had S&Ps down, VIX down, or vice versa. It's very, very odd. But by and large, on the year, the VIX has been elevated while the S&P 500 has been down. So it's working, but it's kind of quirky at times. It's really like it's getting toyed with, and I don't know. It's just weird. And I'm using the VIX. I'm not using the VIX instrument where it's a trading vehicle, and it can get a little bit wonky, like the VXXY, which I don't like at all. Yeah, this is to Franklin. Yep, you were spot on with the Amazon options last week. Yeah, and the reason why I walked on that, I know Franklin did well on it, but low IV just wasn't getting paid, and that was a hell of. Take a look at the what was my price target on there? 36 or 35, Franklin, because that thing shot up and it just flatlined. all the way up to 139 in the after hours session. And then it opened up the next morning and flatline. No downtick, no uptick. It was a craziest thing. It would have drove me nuts. My dad has been long of Amazon for years. He's a happy camper, I bet. Seymour Rivers, 420 on SPY, has been a primary psychological level for about a month. Now, what do we have? 414 on the SPY? Four 412. I was off a couple bucks. Now, based on other circumstances, I'm curious to see if it hits and sustains. Yeah, the weekly charts, we have a lot of overhead supply above, a lot of dead bodies, zombies sitting up there. They're just like this. They got their mouse. They're looking at their portfolio. As soon as that equity position or ETF position gets made from red to green, click, sell, out. Overhead supply. Yoga Mac, I was expecting lower low. Bond market right. Seems cash will continue into stocks. Could be. Short term anyway. I play SPY options. I am buying what Bob and crew are selling. Thank you. We appreciate you as a customer. I tell all my friends that an options trader like Bob quite literally give the best analysis overall. Bob says, thank you, sir. Appreciate it. You're a gentleman. Bob, do you think Amazon holds Friday's earnings gap low? Why don't we take a look at that on? It's a good one. There's my trusty handy dandy notebook where I keep all my options trades. Yeah, the anticipated market maker move. This is my trusty notebook for my options journal for Amazon was $7.14. It was up 12 spots, 6-7. Yeah. So not enough premium in there. This is the risk that you take. You know, you're God forbid if you're new to trading options, you're looking to sell premium on earnings. Do not use the market maker's anticipated move. You need to go way out beyond there, way out beyond. Take a look at the historical percentage move, and then minimum double it, then triple it. Get paid way far away, as far away as possible from the closing price action. All right, so Amazon. I got to make a note of Amazon for Trader Isaac. Okay. As long as mortgage interest rates don't go up, home prices will not fall and no crash of any kind. I'm not a big believer in you see it all over YouTube, people making a lot of videos about it. Even Peter Schiff, to a certain extent, is talking about a crash. You know, with inflation this high, they're not making any more land, you know? And according to the global warmist, there should be less land because the seas are rising. So I don't understand where that's coming from. So I kind of agree, unless somebody else wants to put out there a reason why we would see a decline in home prices. I don't understand the logic behind that. I'm open to conversation. I'm not saying it won't happen. I'm just in doubt land. It's a gray area for me, and I'm looking to have a conversation with somebody that's very, very educated about it. Steven, love staying in oil. They keep it down a lot, but it's only going up. In all probability, yes. Hi, Bob. Happy Sunday. You're the best. Thank you, RB. You're a gentleman. 36. All right. So we nailed it pretty well. Okay, cool. I was all weekend. I was thinking 35. Thanks, Franklin. So we still would have made money on it. Yeah, close it. Yeah, we would have made money on it. I should have traded it. But we got to stick to our knitting. We stayed true. Okay. We have 29 people on. How many likes? Here. Let's move this needle. Refresh. How many likes do we have? 16 likes. 31 people on, 16 likes. Let's get that up there, folks. Please. Let's get that up there. Por favor. Okay. Bob, I just signed up for your Candlestick training. Thank you. Give me feedback anytime, either here, wherever, email. Okay. That is, let's take a quick look at the Nasdaq 100, see what's changed, and then we're going to move on. Or the S&Ps, doesn't matter. We are now, well, we're weakening up here. So we have a new 30-minute candlestick, lower lows. Okay. We're now down 0.41%. We have the VIX is rising. So what we're looking at right now is my general dashboard. And we have the 10-year yield, lower left, which is down on the session. The Nasdaq does not, unlike the S&P 500, which is up top, Nasdaq up top, we do not have a new 30-minute candlestick, lower low. The dollar coming off of its highs, and the VIX inching up higher. These are all 15-minute charts. Actually, the above here is the 30-minute chart. Let's get this in sync. Now it's a 15-minute chart. Okay. Facebook. Didn't we trade Facebook? I think they reported last week, Facebook. Yeah, I think I traded earnings on Facebook. Hi, Bob. XOM and BA, please. Exxon, they reported on Friday, I believe. I think BA, was that Thursday they reported? So, yeah, we could take a look at those. Earnings are in the rearview mirror. Yeah, I could have sworn. Yeah, we played that. We did well with that trade. My only problem, child, is Chipotle Mexican Grill. I mean, this thing, I had a strangle on it, and I had to convert it to a straddle and roll it out. So they reported here. Oh, no, they reported back here. Let's go to a 4-hour chart. Why doesn't this look right? Oh, that's, so I'm wondering what the hell. I typed the wrong symbol. I'm saying this does not look like the chart that's beating me up right now. So I typed in the wrong symbol. Right, CMG. There we go. Now it makes sense. All right, so only when I'm live. All right, so they reported here, rip your face off rally. So underwater on this, but we are at weekly resistance on CMG. We should get a bit of a reprieve this week. So we'll probably be out of this trade early this week, unless, of course, it really starts working for us, and we'll just let it run. But it's a straddle. At some point in time, we need to close out a straddle because it probably will. It's not going to just close at the strike price. For those familiar with what a straddle is, when you sell or buy a put and a call at the same exact strike price at the same expiration date. We sold at the same expiration. 15.15 was the strike. We closed at 15.64.22. So we only have, I think, 2 contracts on. It's not a huge position, but it's a problem child. You don't like problem child. And besides, it's over $1,000 stock, $1,500 stock. So it's eating up a lot of buying power. So we just want to get out of it. Okay. Economic data coming up this week. August the 1st tomorrow. The month is over, folks. Check your monthly charts. See how they're looking. And what we want to look for as we proceed into the new trading month, do we get new higher highs? So tomorrow, Monday, S&P 500 manufacturing PMI, that is an indicator where you want to see a read above 50. A read below 50 is a sign of contraction. A read above 50 is a sign of expansion. ISM manufacturing index, again, same deal there. Watch for a read above or below 50. Construction spending, important. Construction spending matters because it has a ripple effect throughout the entire economy. Job openings, important. Quits. Are we still continuing to see people quit their jobs because they still have stimmy money left over? We have bulleted out more Fed heads giving us their propaganda. Wednesday, S&P U.S. Services PMI. Remember, the last read was a negative read on services. Manufacturing, we saw an expansion, but a slight expansion. Factory orders, watch out for this. If this comes in negative, it's not going to be good. And keep in mind that you have names like Target, Walmart, all cutting prices to get rid of capacity. They have a lot of inventory they need to get rid of. So they're not going to be ordering as much. Initial jobless claims every Thursday. This has been ticking up constantly now. And Friday, this is what I like to call the Pimp Mac Daddy of all economic numbers, non-farm payrolls coming out this week. But I'm not seeing ADP. Oh, I think they suspended ADP until September. Usually comes out the same week, usually on a Tuesday or Wednesday, I forget. And we get average hourly earnings. So this is a classic case of bad news is good news. If you see positive job growth, that is not going to be good for equities. Why? Because yields are going to move up higher. That's a sign of growth. That's a sign that the Federal Reserve can have more room to raise interest rates, as sick and perverse as it is. What else is bullish for equities or bearish for equities? Average hourly earnings. If it rises, I'm going to pause here. Is it good or bad for stocks? Average hourly earnings. If it rises, is it good or bad for stocks? Think about it. The knee-jerk reaction, because you're a normal human being, is that, yeah, that's good stuff, man. People are making more money. That's good. People's quality of life is improving. No. The Federal Reserve hates that. The business leadership hates that. They want lower wages. That's why you're seeing people cross the border in droves, besides the potential voters. So watch out for these numbers. Very, very important. Again, non-farm payrolls, the Pimp Mac Daddy of all economic data that we have to deal with. And when you add up the ISM numbers, again, a reminder, a reading above 50, sign of expansion, reading below, sign of contraction. If we get strong numbers and then you get a blowout non-farm payrolls, look out below for equities. Okay, so a lot of people are bullish out there, and we go through this every single week. And last week we had a very, very low, on a relative basis, low Shiller PE ratio. I think we were at 28.9 on the Shiller PE ratio. We're back well above 30 again, folks. We're back above 30 on the Shiller PE ratio. So to put that into perspective, the historical mean, 16.96. Right? So when you listen to well-dressed, slick back hair salesman on CNBC, Fox Business News, whatever, and they tell you stocks are cheap, forward-looking basis, as if they know exactly what these companies are going to be making on a forward-looking basis. Give me a break. If I knew that information, I wouldn't have such a hard time at times trading earnings reports. So Shiller PE ratio back above 30. The Buffett indicator was fairly valued. We are now back overvalued yet again, folks. We are currently 40% or about 1.1 standard deviations beyond historical trend. Where is that line? Right down here. You are here. So is there more downside to be had? Sure. I would even argue, you take a look at this chart of value. you can make the argument. I don't know. Can I annotate this? No, they won't let me do it. Take a look at this pop here and then the pullback. Take a look at this pop here. Do we get a pullback? Do we get a breakdown? Do we get a head and shoulders setup, a continuation breakdown at resistance on the Buffett indicator? Think about it. If I remember, we'll revisit it next week or the week following. Earnings coming out this week. We love to trade earnings, but we got to get paid. So IV, implied volatility, or the volatility index, has pulled in. Therefore, our ability to get far away from the money as option sellers has been difficult. So we can't take any trade because you get a bad trade. It's a rip your face off trade, and you give back a lot of the money that you made. You don't want to do that. So trades that we'll definitely be looking at: AMD, PayPal, top on the list. Maybe Airbnb. I'm not going to do 3 trades in one go. Too much risk at one time, undefined risk. But we'll definitely be considering AMD, PayPal, and Airbnb. Airbnb, I would be very small with. That's a very volatile stock. What else do we have coming out? Yum Brands on Wednesday morning. That's a possibility. I would trade Alibaba Group. It was 10 years ago. I wouldn't now. I don't trade Chinese stocks. Cloudflare, symbol net. We've done very, very well with this trade in the past. So again, it all goes back. Can we get far away? Carvana, I would not trade earnings unless you were going to take a long bias position and pure speculation, man, because you have a bubble in the used car market. While prices are still very, very elevated, there is a bubble in the used car market, and it's reflected in Carvana's chart price. But it's very oversold. I'm sure there are a lot of shorts in that name. Before I took a long option position on Carvana into earnings, I would want to see how many days of short covering potential that we have, and perhaps get long of Carvana into earnings using options only. That way I have a defined risk, not an undefined risk trade. Too much risk. AMC, no way would I trade that unless I was going to take a defined risk trade. Twilio, again, that would need to be a defined risk trade, not an undefined risk. DraftKings, definite possibility, must be a defined risk trade. So I'm thinking these out. Oh, Cheniere Energy is reporting this week. That's LNG, liquid natural gas. Good business. So those are our potential trades for this coming week. So as I mentioned earlier about the VIX, and as somebody commented earlier, we have the VIX, which has been beaten up. And when you take a look at the VIX on a weekly and daily time frame, we have broken resistance levels. That being said, you take a look at a monthly chart of the VIX. While it's beaten up, you're still forming a big right side of a cup formation. I do not think that equities are done going down. While they could still go up here, because the most vicious the most vicious rallies that you get are bear market rallies. So we still have more room to the upside. In fact, I hope Chipotle Mexican Grill, which is going against me to the upside right now, I hope it moves up higher tomorrow. That way I take my puts off, put that profit in my pocket, because I think that Chipotle rolls over, moves lower, and then we take that trade off and ideally book for a profit. If we have to scratch a trade, that's fine. We're not greedy. All we want to do is free up capital and go do other things. Okay, so much confusion among our elitists. I don't call them elites. I hate when they're called elites because they think that they're elites. The elitist group, those pond scum that think they're above us, but they aren't worth shining my shoes. I wouldn't let them shine my shoes. So we have confusion out there among the elites about what is a recession. And we have Soviet level propaganda, a Soviet level regime. I'm about to lose 2 or 3 likes on this and possibly 2 or 3 subscribers. So be it. I only speak the truth here. Okay, so here's the statement out of the White House. While some maintain that 2 consecutive quarters of falling GDP constitute a recession, that is neither the official definition nor the way economists evaluate the state of the overall business cycle to continue, it is unlikely that the decline in GDP in the first quarter of this year even is followed by another GDP decline in the second quarter. Indicates a recession. We have two back-to-back quarters of recession. If this wasn't so sad, it would be comical. So let's go hear what a former, not Republican, but a Democratic president had to say about what is a recession.
Mr. President, what do you think about a recession?
Well, a recession is 2 quarters in a row of negative growth. I don't think we're going to have that. But we couldn't keep up 5% growth a year. You know, so most of the, I think 49 of the 50 blue chip portion.
Okay, so you heard it from Slick Willie's mouth that come on, mouse, that it's two back-to-back quarters of negative GDP that constitutes a recession. Moving on. The Fed's favorite inflation indicator jumps to 40-year highs. Savings rates plummet. The fact that savings rates are plummeting, the Federal Reserve loves that, loves it. The fact that the inflation indicator is jumping to 40-year highs, they kind of like it, wink and a nod, because it makes paying off the national debt a little bit easier. But all they're going to do is print more money and make it grow faster anyway. So it's 6 of one, half dozen of the other. It's a bad, bad thing. So we had the PCE indicator flash 40-year highs on Friday. Not good news. This is, and that will only add, the reason I brought that up is that is only going to add to negative GDP growth in Q4 of this year. The yield curve. This is all I need to look at to know whether or not we are either A, heading into recession, or B, in recession. So I know I say this every Thursday night, every Sunday night, but remember, we always have new viewers, and please subscribe, like, comment. And it's important to know that you have the power, not CNBC, not the financial news media. They are shills for the government, whether it be Republican or Democrat. All you need to do to know whether or not we are heading into or are in recession is look at this single chart here. This is the yield curve. Basically, this is when the 2-year Treasury yield is paying more yield than the 10-year Treasury yield. And we are deeply, deeply inverted. We are more inverted now than the crash before the COVID meltdown. We are just about, if not lower than, we are now lower than the great financial crisis. We have not yet hit the lows of the pre-crash of the dot-com bubble. So whenever this occurs, it doesn't mean you sell your stocks now, but the problem becomes when the yield curve begins to invert, when it begins to steepen, when it begins to move back up. That's when things get real fast. Allow me to explain. Take a look at the line in blue. That is the S&P 500. The S&P 500 back in 2000, when the yield curve steepened, it rolled over. We went into a multi-year recession. Back in 2007, 2008, the yield curve steepened, began to move back up, and the S&P 500 rolled over. Fast forward, 2020. I have a dear member looking for the live stream link. We will not leave him hanging out there. We will, of course, help get him a link. Our good friend Donnie. And there we go. We take care of our own here. Okay. So, folks, while we need to put things in perspective, you may be saying, you know what, maybe the yield curve has already front run the rollover of the stock market because we've already come down so considerably. Maybe, but I doubt it very, very highly, because all the problems that we had while the yield curve was steepening back here, they haven't gone away. They've only gotten worse. The Federal Reserve has not rolled debt off their balance sheet. You have the government that's about to print another $1 trillion worth of debt. Where are they going to get that money from? They got to go to the Federal Reserve. We don't have $1 trillion in the Treasury. The Treasury ought to be called, I don't know, an empty cigar box that used to hold cash underneath your bed. It's worthless. There's nothing there. It's all IOUs. So this is not going to end well. So please watch the yield curve. Don't listen to financial news media. This begins to pull up. And this is why I was saying earlier, I plan on buying a lot of VXX call options to hedge my entire portfolio, just in case we get a rollover yet again on equities. We have a safety net. Let's do some comments. We're probably going to go over tonight. I have time, though. Yeah, we have some time. Okay. Okay. Talon, raise your hands if you work 2 jobs. Yeah, that's a good point. That's what drove non-farm payrolls last month. Forward PE is the most abused statistic on the street. There's no doubt about that. Hi, Bob. You think S&P 500 will test 390 again? Yes, easily. I'm not saying this week. Lewis, 35 people watching, only 26 likes. Come on, guys. Bob is the best. Thank you, Lewis. Thank you, sir. Hey, Bob, I'm done criticizing the old guy in the office and his weirdo son. That just cost me 2 subscribers, but that's okay. We will keep piloting on and stick with the truth. I think everyone is a distraction from Epstein client list. Fair point. Go after the pedos and the 90% of leaders and politicians change. Agreed. Go after that list. Slick Willie. Salty Army. Hello out. The shout out to the Salt Must Flow. Great people over there. We love the Salty Army. We're a little salty here, but everyone is welcome here. Absolutely. Salty Army rocks. XLV, the biotech moves up. Yeah, we're long of the LABU. I agree. XLV is looking good. Okay. Looking at LABU and SOXL, both are looking good. LABU, we're looking for a breakout. LABU above 10. I'm not sure about SOXL, but I think that we have resistance immediately above on the semiconductor sector. I would also like to get commentary on Newmont Mining. We'll take a look. Okay. Hey, Donnie, you're welcome, pal. Glad you got here. Okay. So we have more debt coming. So this is just a perfect example of our rhino incompetent Republican Party. They are the controlled opposition. They are not opposition. They are the controlled opposition. They are worthless, and they just got their heads handed to them. The so-called majority or minority leader of the Senate, the Republican leader, Mitch McConnell, got taken to the cleaners. Statistically indistinguishable from zero. Wharton study finds Inflation Reduction Act. I love how they name these things. Inflation Reduction Act. So they printed over $4 trillion within 1 year. And inflation ripped through the ceiling. Now they're proposing to spend at least another $1 trillion. And it's going to send inflation lower. The very definition of insanity is doing the same thing over and over again and expecting a different outcome. Except this isn't insanity. They are pilfering this country, sending $40 billion and plus over to the Ukraine and growing. Nobody monitoring this money where it's going. and we are being pilfered. We are being robbed. Republicans charge that Manchin misled them in supporting a $280 billion chips and sciences bill. They trusted Manchin? I'm sorry. The Republicans charge that Manchin misled them? What are you, 3? Are you supposed to be politicians? You don't trust the opposition. A bill that would have they would have otherwise opposed. Others criticize the bill, the name of the bill, which contains a significant number of climate change items long sought by Democrats. Folks, this is the biggest grift that has ever been put out there besides the vaccines, besides the COVID vaccine hoax. Take a look at this. Actually, we have a little bit more to go. Manchin premised his change on the bill on the fact that the bill would reduce inflation. How is that possible? Somebody articulate for me how it's going to reduce inflation. So let me get this straight. We're going to print new money because the only way you're going to reduce inflation is print new money and pay off debt. There's only one problem. You're going to pay off debt at a higher interest rate than what you're currently paying. This is absurd. The act would combat climate change. We'll go to this in a moment. Extend enhanced Obama subsidies. Oh, that's deflationary. That's really deflationary. And reduce the budget deficit by roughly $300 billion. Here's where it comes. They're going to raise taxes into a recession. They're raising rates into recession. They're raising taxes into recession. What are we, Herbert Hoover? That's how we got into the Great Depression. That is a $52 billion less in deficit reduction than the claim by the Democrats. There is not going to be a deficit reduction. They're going to continue to spend. And the review found, so this is the Congressional Budget Office. That is $52 billion less in deficit reduction than the claim by the Democrats. And the review found the bill would actually very slightly increase inflation until 2024 and decrease inflation thereafter. I believe in the increase. I don't know how the hell they get to, sorry folks, family-friendly show. I don't know how in the heck they get to a decrease in inflation. It's bizarre. So moving on with the climate change theatrics here, this is just wonderful. I love this guy.
When I asked, well, just a moment, Alice, you've been speaking for most of the night. When I asked Tanya Plibersek,
we'll fact check that one for you. Yes.
When I asked Tanya Plibersek, was the Deputy Leader of the Labor Party and the potential Deputy Prime Minister, was carbon dioxide the big issue in relation to climate change? And she said yes. I then said, well, that being the case, what percentage of the atmosphere is made up of carbon dioxide? And she said, I don't know. And I said, you don't know what percentage of the atmosphere is carbon dioxide, and yet you're prepared to stand the economy on its head to address a problem, the detail of which you don't know. When I then explained that the percentage of carbon dioxide in the atmosphere, Alice, is how much? Alice, how much? The carbon dioxide in the atmosphere?
To answer the question, Scott Morrison has said he's pushing climate change and that he wants to do something about it.
Alice, how much carbon dioxide is the problem? How much carbon dioxide is there in the atmosphere?
I'm not a scientist. I don't know.
Well, hang on. If you're going to argue the case you ought to know, it's 0.04%. And of that 0.04%, human beings around the world create 3%. And of that 3%, Australia creates 1.3%. So for the 1.3% of 3% of 0.04%, we then decide to have a national economic suicide.
It's the great grift. But you get emotional about it while Obama and all these other clowns around the elitist community buy mansions on the coast of California and on Martha's Vineyard for the tune of about $35 million. So much for being a public servant. I thought this was interesting. We're not going to spend much time here. Court rejects Google's attempt to dismiss Rumble's antitrust lawsuit, ensuring vast discovery. Wonderful. A Federal Reserve Court in California on Friday denied, all states, California, on Friday denied Google's motion to dismiss alleging the Silicon Valley giant is violating federal antitrust laws by preventing fair competition against its YouTube, got to be careful, platform. The lawsuit against the search giant, which has been owned by YouTube, which has owned YouTube, since its 2006 purchase for $1.65 billion. What a deal. That was a great deal. Was brought in early 2021 by Rumble, the free speech competitor to YouTube. Its central claim is that Google's abuse of its monopolistic stranglehold on search engines to destroy all competitors to its various other platforms is illegal under the Sherman Antitrust Act, which makes it unlawful to monopolize or attempt to monopolize any part of the trade or commerce among the several states or with foreign nations. So we'll keep an eye on this. And here's Rumble's chart. I happen to really, really like this chart. This is a weekly chart, RMBL, the symbol, consolidating below the lower band of support. And this is a monthly support level, folks. See the dashed line in blue is monthly support. So not insignificant. It's very, very significant. So we're looking for this to hold. We're looking for a breakout here. In fact, I'm probably going to be buying some Rumble this week. The month is now closed. We closed right at the upper band of resistance. Stokes going very, very nicely, gaining momentum to the upside here. So Rumble, looking at it as a long trade. So moving on with that climate change deal for a moment, because I kind of got out of whack. I skipped over. Israel's war on cash. Folks, you're going to hear more and more about this. China is already digital. And you see how things are going with the Chinese people over in China. Israel's war on cash is about to get more drastic. Starting Monday, it will be a criminal offense in Israel to pay more than the equivalent of $1,700 in cash to a business, or $4,360 in cash to an individual, as the government intensifies its ongoing war on tangible money. They want to know what you are doing. The number that you have on your cash right now, the descriptive number, serial number, that will be in a digital dollar. There will be no more cash. And that way they're going to track everything you do. And they're going to use this climate change hoax or this medical tyranny as a way to control you. You haven't had your vaccination yet? Guess what? No access or limited access to your digital dollars. You had cash under your bed? Doesn't matter anymore. It's worthless. So think about buying physical gold, physical silver. At least you have tangible goods to barter with. We're going back to the barter system in a very, very big way globally. It's war that began in earnest in 2018 with the passage of the law of the reduction of the use of cash. Israel businesses and individuals began facing limits on cash transaction in 2019, and people are beginning to freak out over there. Edward Snowden. I once warned that an architecture of oppression was near. It has arrived. What else do we have? World Economic Forum. These are the puppets that, if you're wondering why the federal governments around the world are doing what they're doing, it's not their ideas. It's not their ideas. Do they fear the people? Do they want guns? Yeah, because they're afraid of a revolt. Because the marching orders are being given by this guy here, Klaus Schwab, Henry Kissinger, these fossils, these 80, 90-year-old fossils that are still alive and giving marching orders. So now there's a war on farmers. They want to control the food supply. They want you disarmed. Trudeau is banning guns. He admitted it. He's banning guns. They have a gun buyback program, and then they're coming knocking on your door in Canada. Here, the House just passed a sweeping gun ban. They call it a military style weapon, whatever it's called. But it pretty much takes most guns, like millions upon millions of guns, off the table that you can own. So They're coming for the guns. Be careful. This tyranny is only about to get worse. We'll skip this. Let's do some chart requests. Let's see what else popped up on Zero Hedge. Kristen Cinema, we're really hoping for you to do the right thing here. She's the one vote that can prevent this passage, this legislation from going in. And I think Manchin's days of number in West Virginia are quickly coming to a close. All right, let's go to comments. Then we'll do some requests. Folks, just join. Please, if you could hit that like and subscribe button, I'd really appreciate it. $77 man, 77. The Great Reset is in full effect. Contrarian trader, yes, it is. Seymour Rivers, how many emissions are being emitted by over Pelosi's visit to Taiwan? Think about it. They just diverted a U.S. carrier task force. They're going to have to send fighter pilots to help escort her plane over to Taiwan. I guess she's going over to Taiwan to see how her chip investments are doing. I don't know what the hell she's doing over there. Maybe they have some good alcohol for her. Okay. Okay. Talent. Not to sound like a radical, but I remember God saying there would never be another flood. TZ Burton. Ben Shapiro says facts don't care about your emotions. Very true. But the left doesn't respond to facts. Correct. We need to put some emotion in our arguments to them. Yes. Amen, Donnie. Totally agree. Outstanding. A red flood of patriots are coming. Let it flow. The salt must flow. Yes, sir. Tim Pool, one of the biggest YouTubers, is using Rumble, has a server switching from Amazon servers. Yeah, a lot of people are doing that. A lot of people don't understand that Rumble is a lot more than just simply a platform. They are a web hosting platform. So much for being able to take your website offline anymore. People are going to Amazon. Truth Social, Donald Trump's platform, is on Rumble servers. I would read your note. I can't pronounce that P word. Confirmation that black nobility, aka Zionists and Jesuits, are running all the shit. Okay. All right, let's do some chart requests. I know we had Amazon. What else do we have? If I don't read off your symbol, that means I didn't write it down and I missed it. We have XOM, we have BA, we have Google, we have Shop. Goog with no L. Shop. They've already announced earnings, I believe, right? Apple. Newmont. LABU, SOXL. All right, we have a lot to go over here. Let's the banks for Donnie as well. Okay, let's get to it. Let me go to the members area first, make sure I didn't forget anybody that entered late. No, we're good. Okay, let's get to it. Folks, we're going to be using TrendSpider, 35% discount code below. Automated technical analysis, back testing, strategy tester, seasonality. There's so much there. Just go sign up. 7-day free trial offer, 35% discount code below. Take advantage of it. Awesome product. We did Rumble, bullish. Let's go to the daily chart of Rumble really quick. Bullish. We broke out on Friday. Rumble going up higher. Amazon. Ugh. All right, so the question was, will we back? What the hell's going on here? All right. Okay. I had this typing teacher that taught me my home row keys. It was Miss Jackson, a lovely African-American lady. I had the biggest crush on this lady. So elegant. And she taught me my home row keys. But I am letting her down right now. Miss Jackson, if you're watching, which I highly doubt, God bless you. Yeah, Amazon's probably going to get a pullback. I think that we are going to retrace back down here. This is a monthly chart, folks. So for those wondering, hey man, this is a rally that's going to take us to new highs. I don't think so, right? You have a lot of resistance immediately above, right here. I would even bring that up a little bit higher to around 140. But we're in that zone. And if you take a look at the closing price action on Amazon, or you look at the price action all day on Amazon, because remember, they reported Thursday. You take a look at the price. Come on, man. Come on, man. You take a look at the price action all day Friday, it did nothing. So why is that? Well, we hit a high in the after-hours session, 139.39 in the after-hours session on Thursday night. Nobody was willing to bid it up. I think it is going to move up this week. But remember, 140, a lot of resistance up there. The reason why I think it's going to move up higher, assuming that the S&Ps and the Nasdaq doesn't roll over, we have very, very tight Bollinger Bands setting up for a nice continuation rally. Let's take a quick peek, see what the Nasdaq is doing. Off of its lows, down about a third of a percentage point. We have a lot of time to go. VIX coming off of its highs. Dollar weakening up here a little bit. Yields are moving up. So we're still at a 2.7 handle. Beta stocks, high volatility stocks can move up higher as long as we stay down below a 3 handle on the 10-year yield. Watch out for a 3 handle. What happened? Am I no longer live? I don't know if we're still live anymore. It says we're live. All right. Guys, my streaming software crapped out on me here. Are we still live? Could somebody put a note? If we're still live, can you put a note in? All right. So, and you can see my screen. Okay, cool. And you can see my screen? I'll keep going. I can see the comments on YouTube. Good. We'll keep going. I can't take Yoga Mac's comment off. So sorry about that. Okay, let's keep on going. So we're seeing some strength come back in bond yields and on the price of the indexes. Thanks all. Appreciate it. Okay, so Amazon to continue. Resistance immediately above. I want Amazon down here. 122.21. Bam. We're going to create an alert here. I know we're past 7 o'clock. We're going to keep going until we're done with all these. Touch, bounce. But I'm going to also add, I want to know if we break through it. And the why behind that is that if we fail to hold the support level at around 122, we're coming down here. We'll keep this active. down here to 111 per share. So let's just be aware that we have a lot of resistance above. I would not buy this stock here now. Again, overhead supply above. Might we move up higher? Sure. Support down here. That's the only where I would get in. Daily chart. Big gap up higher. We broke out. And these are the automated trend line, folks. Click of a button. Bam. So this is telling me I have a couple of support levels below. One in red, another in green. The number to watch in red, 131. The one in green is down at 127. I'll create an alert here, and we'll engulf the upper resistance level or support level now. We're going to do the same thing. We want to know if we break through, touch, bounce. Because remember, I'm of the mind that this is only a bear market rally and that we're probably going to see lower lows. And it may be a year from now, folks, if Powell pivots and he says, okay, we're going to pause on interest rates or we're going to increase the balance sheet, well, that's going to send stocks higher, at least in the short run. So it could take a while if he does pivot. And one could argue that he already has begun to pivot. So Amazon, resistance above, support below, our alerts are set. ExxonMobil, apparently they'd blow out numbers on Friday, higher highs. You're going to have resistance up here at around 97.88 on a daily time frame. Stokes are overbought. If we retrace back down to 92.71, I think that's a good entry point. Weekly view. Here's that resistance level again. I wouldn't buy it here. It could. I'm not saying it's not going up higher. I think it is going to go up higher, but a risk reward perspective, you can't buy it here. Maybe you want to look to buy at, maybe you want to look to sell naked puts and reduce your basis cost and get in at a more friendly support level. So ExxonMobil looking strong, but we do have resistance immediately above. Boeing, they've reported. So we have earnings in the rearview mirror. Let's get rid of this. We've broken out of a weekly downtrend. We're consolidating. There's a lot of overhead supply up here. So I don't think that Boeing is going to be a quick moving stock. But I think that with the weekly Stokes rising, let's go to the monthly view. And for those not familiar with the stochastics, it's basically an indicator of where's the momentum going. All right, just a quick snapshot view. And you could see that on a monthly time frame, Stokes are hooking up. And I'll tell you, the monthly chart, and remember, the month is over. This is in the books. This is a nice breakout here on a monthly time frame. You're going to have resistance up here at 168.57. So Boeing looks good. Moving on. Goog Noel. Monthly view. All right, we retraced all the way down to support. That support level held. So it appears as though we've taken step number one in what is the first step to a rally. That is to stop going down. The question is, do we have a bear flag setup? We don't know. So I would be careful. Know where your resistance levels are, because if you buy this thing on a breakout, let's say above 120.50, if we fail to hold that support level, you need to get out. Weekly view. Good looking chart. I would have zero problems with selling naked puts here, buying the shares. I would stay small on buying the shares, though, because you have resistance immediately above. I'm not going to be the least bit surprised to see a breakout on GOG. Stochastics rising, validating that this support level is holding very nice, and we're beginning to see steam grow to the upside, creating momentum. Daily view. We broke out on Friday. Earnings in the rearview mirror. Assuming that the overall market holds up, I think that this is going to hold up as well. Shopify. Go with the monthly chart first. The monthly chart is still a big concern. And the reason is this. What was resistance back here in 2019 and what was support back here in 2020 is now resistance yet again. So we've fallen back down into a trading range, and all the gains from the COVID rally are now gone. So you have to ask yourself the question, in a slowing economic environment, what's the catalyst to send Shopify higher? That being said, that's my opinion. My opinion means zero. I am not a fundamental analyst. I am a technician, and the chart is telling me it's looking pretty good. We're beginning to put in higher lows. We're building a multi-month base. Stokes are hooking up. I think that Shopify can be bought. Use a stop loss right below this low here at around 29.55. Daily view. Friday's right here. We're right at resistance. We have a higher low on the stochastics. I love the setup. I think we're breaking out here. So Shopify looking very, very good as a long. Just remember, this red line here represents monthly resistance going back to 2019. So stay small now, add more on a breakout. Oh, yeah. Australian CO2 video. Here we go.
I'm happy for you to have made that point.
I'll share it with everyone. I'll put it in the forum. This is our members forum. Yep. Okay. All right, cool. All right, so Apple. Apple has reported good numbers. You can't buy Apple here. No way on God's green earth can you buy Apple. Why can't you buy Apple? Well, where do we break down? Right here. Where do we hit highs on Friday? Right here. So if you buy here, you're buying into all these people that bought. They couldn't believe that Apple would ever go down, and they went through this swoon. They want their money back. They're not looking to make a nickel. Their trading platform on Apple goes green. They are out selling. So you can't buy here. I would wait for a retrace to support at 153.44. You got it, Talon. Okay, and also take note, your stochastics, and this is going to go for a lot of stocks out there, if not the indexes as well. Your stochastics are trading down below 50. I always say this to members. I'll say them whenever I do another best stock charts. When you have stochastics trading down below 50, rallies tend to fade. That saying, which I created, copyright protected, that saying has kept me out of a lot of trouble. Rallies tend to fade. Our stochastics are declining, trading down below 50. Be careful. We could very easily retest the support level. Weekly chart. Again, a ton of overhead supply above. I would not be a buyer here. Wait for the pullback. Again, daily chart. At resistance, Stokes are overbought. Avoid Apple. Newmont Mining. Well, I'm surprised. I'm surprised at this chart. Newmont Mining, folks, is a mining stock, gold mining stock. Wow, what happened here? Did they report? This is a train wreck. Newmont Mining is dead money. You got to wait for, if you're looking for a price target on Newmont Mining, you looked at a bare minimum, $42 a share. But in all probability, we're going to overshoot to the downside. We're going to head down to $39.75 per share on Newmont. I would not buy this stock. Avoid it. You look at it on a daily time frame. It looks like it's holding support. How do I know there's support below? Because TrendSpider is good enough to tell me, because I click a button, it goes green and says, okay, there's support down below. Might this hold? Sure. Would I buy it here? Only if I was committed to putting a stop loss right below the lows of July the 25th. If we take out those lows, you got to get Newmont, because we're going to go down to those support levels that I mentioned before. So I'm not sure what's going on here with Newmont, because when you take a look at GDXJ, this is the junior miner ETF. It's breaking out. Even the senior miner leveraged ETF, NUGT leveraged ETF, it's breaking out. Newmont Mining is underperforming. So just be very, very careful with Newmont Mining. It is lagging. We don't like laggards unless we're short. LABU. I can't bring the comments, guys, up, so I apologize. Franklin, you're welcome. Tom Liu. Oh, Tom Liu. I can't bring the comments up, but earnings on Newmont stink. That's why. Okay, that makes sense. TZ Burton. Boeing workers are back to work. 2, I live in Seattle. Okay. Talon, you're welcome. Thank you, Bob, for adding clarity to this market. You're very, very, very welcome, sir. All right. LABU, we are long of it for disclosure purposes, as we are of NUGT, GDXJ. This is a monthly chart. So the value I get here in the monthly chart, Stokes are beginning to hook up. We've clearly stopped going down. I like it for that reason. Weekly view. The weekly view, I know for a fact, is why we bought it. We saw the beginning of a breakout on LABU. We were selling naked puts. We averaged our basis cost down, and now we are looking for a breakout on LABU above a 10 handle. If we get a close above a 10 handle on LABU, which is right about here, actually it's about $11 a share, I would be looking to add more to the position. Not quite yet. I'd be more than happy to do naked puts yet again. If they're put to us, fine. Daily view. Nice setup here. We broke out here on July the 20th. We've been consolidating ever since. We do have an upper band of resistance. How do we know? Trend lines, automated trend lines. Thank you, TrendSpider. 35% discount code below. So this is going to act as our upper band of resistance. So what I'm going to want to do here, since we're long of the trade, I want to know when we touch or bounce off of that upper band of resistance. And we're going to keep this active for a long time, because I may not want to sell, or I may want to leg out of the position. So if this gets tapped once, maybe I'll sell 20, 25% of my position, make some of the profits real. If it gets hit again at a higher price, because remember, this is rising. We may scale out a little bit more. And we're good to go. So I like LABU, stay small, add more on a breakout above $11 a share, and you can sell naked puts here. If you're sophisticated, please, and I'm not sophisticated. I still need, let me rephrase, because I don't need to tell you this. I am not sophisticated. If you are experienced, that's a far better word. Words matter. Words matter. I don't want to offend people. If you are experienced, sell naked puts. If you're not experienced, paper trade. SOXL. This is going up higher. Well, this is a daily chart. Hold on. I did not identify resistance levels or support levels yet. Here's what I was talking about earlier about, I wasn't talking about SOXL, but I knew the SMH we went over the weekend, and that was near resistance. Same thing here with SOXL. So would I buy here? No. Why? Resistance above. How do we know there's resistance above? Well, the algorithm is telling us that. So let's take a look at a weekly chart. The weekly chart is not showing us resistance levels. That could cause us trouble. So what we're going to do is use this functionality here. We're going to overlay monthly support and resistance levels onto a weekly chart. Now we know why we should not be buying SOXL, the SMH, because you have a lot of overhead supply. You got to wait for a pullback and a higher low. Where might that be? Well, we could pull back here, 1355, or maybe here to 1359. That's 6 of one, half dozen of the other. So what we'll do is we'll create an alert, touch, bounce. We'll keep some sensitivity on. So that way, if we touch this volume shelf, we can look to get in. As a matter of fact, I want to know if we break down through it as well, because then it becomes a short. So SOXL, avoid right now. Wait for the pullback. XLF. This is a daily chart, a weekly chart. Let's pull back to the monthly chart. Let's get a feel for what we're doing here. I think we're going up higher. We had a nice bullish reversal bar on the month. For those folks not familiar with the terminology, link below, 35% discount code below. Excuse me. Oh my God. There's a link below, my 5-part video tutorial, my top 5 favorite candlestick patterns, free. No 35% discount code. It's free. Go check it out. XLF. So TrendSpider is not showing a resistance level here, but I am seeing one here at around $35 per share. Where do we close? $33.71. You got to wait for a retrace. Too much risk, not enough reward. Where might that be? Let's go to a weekly chart. Perfect. Right here. 32.35 is support. You can see we broke out above it the week before last. Last week we retested it, moved up higher. If you're nimble and you're going to get out at $35 a share, because we're going to probably pull back, because remember, all of these people that bought up here, they want their money back. Overhead supply. Daily view. Looking good. It's going up higher. I'm not bearish on it. I want to pull back before I got long of it. If you're not willing to buy here, I understand 1,000%. Look to sell naked puts at $32 a share. Average your basis cost. With that, folks, that is it. And everybody have an awesome, awesome trading week, a profitable trading week. And I will talk to you throughout the week. Be well. Thank you for being here. Hit the like button, subscribe, comment, TrendSpider, 35% discount code below. And Larry, we appreciate you, the extra time you put in, give us tonight. You're very welcome. Thank you. We will get you some expensive Cuban cigars for Christmas. Awesome. Awesome. Pete, you're welcome. Seymour Rivers, you're welcome. Everybody, you're welcome. Thank you for being here. It's my pleasure. And I'm honored. Thank you. Be well. Good night.